Probably, if you're in the world of crypto, you've probably seen in the last day, if you've been watching any of the things happening in the main news. There was an interview with Andrew Ross Sorkin of the New York Times, who was on, I think it was like MSNBC or CNBC, one of those channels. And he was interviewing the SEC chair, Gary Gensler. And he was speaking with him about whether or not there would be an Ethereum ETF, right? An ETH ETF. Whether or not that was likely to happen, and could that be something investors might be able to count on, especially if they've already invested in ETF or they're looking to it. And Gary Gensler, gave the usual word salad answer, asking, the interviewer, basically not answering a question, but answering with another question. But the really bottom line of all of this, if you think about it, is an Ethereum ETF good for crypto, right? And the answer to that, coming from me, might surprise you, or maybe not. Is that I think it actually would be in some ways. It would not be in some other ways. And most importantly, I think it's moot. Okay? Why? Well, okay. How is it good? Well, it's good because obviously there's a demand in the market for more crypto ETFs, given the relative success so far of the Bitcoin ETFs. If you look at the amount of inflows that these products have had since they launched earlier this year, ETFs have basically had some nice growth since then. And it was only last week when we saw prices dip a little bit. I think it was on Wednesday of last week that we saw the first day of outflows exceeding inflows, meaning it was the first negative day on the BlackRock Bitcoin ETF. And it's just one of many, but it's the leader so far. So within a day, some not insignificant amount of inflows that would normally come in instead were going to the out. Meaning people were cashing out of their ETFs. And once again, the smart money was fooling the dumb money, and people were taking profits at the top, and retail traders who don't really have a clue were getting basically effectively tricked into selling off their Bitcoin ETFs, which they did, and they got wrecked, or they lost money, or they made less profit, depending on where they got in, etc. Because a lot of them, of course, sold after it was falling already. So the question is, obviously since then, the price bounced back a little bit, and now is once again walking down. So, is that overall good for the crypto space? Well, again, it really depends on what you're looking at. So in my view, the crypto ETF could be wonderful and everything, but here's the thing. An Ethereum ETF could be good. But here's the thing. Ethereum still has an underlying problem. And the problem is with the ridiculous gas fees, which are traditionally very high on Ethereum. And for all their updates over the past few years, switching from proof of work to proof of stake and other upgrades they've done since, they haven't yet, and they're not planning to, fix the gas problem, right? And the whole concept of switching to proof of stake, in theory, could have fixed that. Because if you're not doing proof of work, then you can really make the gas fees significantly lower, since there's no proof of work required, right? You're not actually using nearly as much energy as a proof of work system. So why can't they just have lower fees, right? Like incredibly lower fees. Well, because they didn't put it into the architecture, and they didn't include it in the upgrade, and they don't have really any plans to do that. Which means that for all intents and purposes, gas is going to remain unattainably high for most people, and in many cases, gas will cost more than the transaction fee, like the transaction amount, right? The value. Say you want to send somebody $5, don't be surprised if it costs you that $5 plus $15 or $20 in fees, which is ridiculous, right? Why would you spend $25 or $30 to send somebody $5? It's nuts. Likewise, if you're gonna send somebody a couple $1,000, it's entirely possible that you might spend $4,000, $6,000 or more on just the fee. That is completely crazy. Now, there are people that do it, namely banks and other large institutions that have access to effectively unlimited cash or unlimited ETH, and they don't care what the price is, because they have a vested interest, frankly, as large stakeholders, to have high fees. Because guess what? They get paid those high fees when they run the transactions for anybody, including themselves, right? So they can take fees if they run their own networks and process their own transactions. Or they can just simply charge other people the transaction fees. So what do they care if one transaction costs them, several grand or several $100,000, if they can do that over and over again throughout the course of the day to other people, right? So really the only people who have a vested interest in maintaining the gas scam are the largest shareholders or the largest bag holders of ETH. What does that mean? Well, that means that it is not going to be a solution for the average everyday person. What does that mean? That means it's not a scalable solution when you come right down to it. It doesn't matter if they claim to be able to do more transactions per second than Bitcoin and have smart programmable contracts, which are really dumb programmable contracts, but whatever, because they're just routines, right? Routines aren't smart, routines are dumb. But they call them smart because they want to sound high tech, right? So what could be done to make an Ethereum ETF worthwhile? Well, obviously, other than regulation saying yes, we recognize, Ethereum as a commodity and therefore, or a property or whatever, just like Bitcoin, and therefore there can be an ETF for it because it's not an unregulated security, so it's fine, right? Yeah, that's one thing they can do. And what will that do? That might lead to an influx of buyers of Ethereum ETFs. And is that good for crypto? Well, maybe in the short term. But as long as it has that remaining problem, which is the gas scam, the gas fees, gas scam, it's not going to be solved for the scalability issue. It's not going to be solved for the ability to satisfy a mass market the way that Bitcoin can. Now, you can tell me, what are you talking about? When Bitcoin launched runes on April 20th at the fourth Bitcoin halving, the fees went through the roof for like a week. Yeah, the fees went through the roof for a week. You know why? Because people were minting ordinals and creating runes. Right? They were inscribing ordinals and etching runes at any cost because they wanted to have among the first, runes ever, and launched on that date because it's very meme worthy, and they wanted to have ordinals inscribed on that date because meme, and because collectors and all that stuff, they value certain character traits or traits to inscriptions and all that kind of stuff. And then what happened? Did the gas fees stay ridiculously high? No, they came back down to the normal amounts. Right? Bitcoin transaction fees are relatively low cost. And you can tell me, oh yeah, well it cost me like $5 to send a $15 order or a $20 order. Okay, first of all, that's still a portion of the value of the transaction and not more than the value of the transaction on a regular basis. And if you send like $100 million in Bitcoin for $5, or in some cases 50 cents or whatever, I've seen transactions like that over the years, try doing that with a bank. Right? That's not a thing that's going to happen. So, when it comes to whether or not an ETH ETF would be good for crypto, the answer is really no. Long term. Short term and medium term, yes, it could be. But long term, very unlikely, because it will very likely not be a good thing when more and more investors realize, hang on, there's this gas issue, and until it's solved, investing in Ethereum is not a great long-term idea, unless you want a product that is only available to really rich people and not one that's available to the average person. Right? And if Ethereum is supposed to be the computer of everything or whatever, the next everything computer, well, how can it be the next everything computer if nobody's going to use it? If the only people using it are banks and institutionals and a few, crypto fans, how is that going to be useful for the larger, broader crypto sphere? And the answer is it's not. Which is why it's important for the overall ecosystem to really focus on development and growth and making the products better, and focus less on individual ETFs hitting the market, as opposed to having better products overall in the marketplace at the underlying level, and not just at the second layer or third layer level. Because after all, an ETF is not an underlying asset. It's a piece of paper that says you have the right to claim a certain amount of Ethereum if you cash it out. Right? You're investing in the Ethereum, in shares of it or whatever, so you're buying pieces of it at whatever price it is at the time, but you're not actually buying the Ethereum itself. Right? You're buying a kind of a promissory note that says, yeah, you own this Ethereum, and if you cash out, this is what you get. But do you really? Just like gold, right? If you buy gold, unless you actually buy the physical underlying asset, the actual physical gold, the piece of paper that says you own that gold, prove that you own that gold. I mean, it's a piece of paper, right? Sure, they might honor that paper at the company where you bought it, or at the company where you sell it, but what if they don't? What if they go out of business and you can't claim that piece of paper anymore because they have the rights to hold that paper as collateral in case they have a heavy debt that they have to pay off, right? So, yeah, think about that. We'll talk more later. Happy trading.